Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how the US E-minis unfolded yesterday, particularly because it was like a fairly horrible day. It actually chopped sideways, as you can see. The YM didn't really go anywhere. Same with ES, very short, sharp swings and not really going anywhere. It's also quite difficult on the larger degree trend, because if we look at the 15-minute chart, you can see we didn't really have many swings to work with before yesterday unfolded, which was the 12th of February, and same with the NQ, same with the YM. So for MTPredictor users, the best thing to do yesterday would have been trying to trade with the direction of the STF color, which is blue for up, black for flat, and red for down. I want to start off with the YM because I want to show you how correct position sizing can really help in your trading, particularly if you have some losing trades. And we know that any professional trader will always have losing trades. It's no sense trying to avoid them. The trick is just trying to keep them small. So I want to choose this because this is a good example to show you how you can get back from losing trades. So let's have a look at the standard setups on the 3-minute YM from yesterday. So the standard setups to start with, you see here we had a history triangle. This shows us that if we place the analysis on this particular bar by right mouse click and do analyze setup, we would have actually been taken in by a tick or so there and then been stopped out. So that would have been a losing trade. So what does position sizing do? Well, it varies the number of lots, contracts or shares to keep your initial risk small and constant for each trade. So in other words, we view this as one risk unit. So that would have been a losing trade and you'd have lost one risk unit. Clear it off. We had a TS1 buy setup here, blue STF, another valid trade. Let's place the analysis on, taken in, stopped out a little bit later. So now you've had two losing trades. Down here there's another history triangle, you can see it there. You see we don't hide anything in the software, we show you where there would have been trades that would have been stopped out. Again we place the analysis on to see what would have happened. Taken in. This time the number of contracts was slightly larger to keep our initial risk exactly the same. So at this point you would have been stopped out again. So just before this low you would have actually had 3 losing trades. Now that would have been very hard for some people to take a look at. But then there was another setup coming down here, this TS4 buy setup. Now the target was way up here. So what we do as more advanced traders is when the target is so huge and we're anticipating a choppy, horrible sideways day, we can have a shorter or closer target, which is the DP from the last swing into the high or low, which on an ABC correction, which is our TS4, is from the wave B high. So in other words, we take our DP from this particular level here. Remember, DPs are leading indicators. They are on our chart in advance before the market even gets there. So this level would have been up there waiting for you. As you can see, the YM rallied up here, and as it hit that target, it actually gave us a TS4 sell setup, which would have been perfectly valid because that was on a black STF. So at this particular point in time, you'd have done a stop and reverse. Remember, we're already minus 3R down, but just look at the profit here. The profit here at plus 2.4R would have already made up for most of the losses earlier in the day. So you'd have been minus 3R plus 2.4R. Now you would have then gone short at this particular point here. Again, the target was quite a long way off, so you could have again used the DP from the wave B extreme, which is off here. As you can see, that caught that low absolutely beautifully. What would the profit have been at that particular level? The profit would have been plus 3R. So here you were with 3 losing trades, 2 profitable trades, but the 2 profits at 2.4 plus 3 would have been 5.4R. In other words, 5.4 times or risk units or times initial risk. So can you see how just these 2 profitable trades would have more than made up for the 3 losing trades earlier? So even though you had more losing trades than profitable trades, you still made money overall. So plus 5.4 minus 3 equals plus 2.4R overall. So this was a very good example of how correct position sizing can help you make money even if you have more losing trades than profitable ones. Also a very good example of how to use our DP from our wave B swing when you have a choppy and horrible and sort of narrow range day. This is a technique we teach in our training webinars. I've deliberately chosen this market because it was actually one of the worst ones yesterday. Again, there are very few vendors who will start off their videos with the worst example. In other words, the worst example for their software. But this is a reality check for traders, and I want to make it clear that all trading software will always have losing trades. It's no point hiding it. It's just a fact of life that losses will and always will come through. But the trick, as you've seen here, is keeping them small and having an approach where the profits are much larger than the losses. Let's have a look at the ES. Again, a fairly choppy, horrible sideways day. This first sell setup here would have been against the blue STF, so you wouldn't have taken it. You would have taken this TS4 buy setup here. Market goes up into this particular level here. There's your history triangle, so you'd have been plus 1.4R. This one, because it's on black STF, would have been a minus 1R loss. You'd have then had another minus 1R loss there. This TS4 buy setup was just about at the blue, so that would have been a valid trade setup as well. Our DP target from our wave B swing would have been down here. So at that level, you'd have been plus 2.3R. So you'd have had 2.3 plus 1.4 minus 2. Again, a profitable day, a plus 1.7R. So a very good example of how even when the market is choppy and not going anywhere, the tools in MTPredictor can help you out. One thing I didn't show you on this YM chart was also at this TS4 buy setup down here. This was also at the DP from the prior swing low here. This was the last swing into the high. This is what I teach in our training webinars. You should have placed the DP off that level there. Again, these are on the chart in advance, ready and waiting for you. So that would have been a good support level there, and in fact that actually nailed the very low of the day for you. So not only did the DPs catch most of the intermediate swing highs or lows, as you can see here, but it also caught the low of the day for you. So even though it was quite a hard day, choppy, narrow, sideways, and a fairly yucky day, the MTPredictor software did a good job of keeping you under control with disciplined trading and only trading when a low risk probability occurs, and even though you do have losing trades, the losses are kept small and the profits are large. So hopefully that's been a good example of MTPredictor in action on a fairly horrible day, and showing you how risk control is really the best way forward if you wish to become a professional trader.